Right, good morning. Today is July 26th, 2023, and I'm back with another edition of the Wednesday live show. And of course, as everybody knows, today is Fed Day, and the Fed is expected to raise interest rates another time by 25 basis points, which obviously is priced in because that's the expectation. And interestingly enough, they paused last time, as you recall, which is kind of strange. You would think that they would have just hiked to the terminal rate and that's it. So it's kind of odd that they paused and now they're going to hike again. And of course, there could always be a surprise, but I doubt it. Or at least I should say the market doubts it because, 25 basis points. So that's already priced in. Nobody really cares about that. It's not that important, if they hike again. The important thing will be whether they signal that they're done or not. And my guess is that they're going to use sort of the same sort of playbook they have been for a long time now, saying that they're data dependent, right? And so, I'm sure that Powell will potentially hint that this could be the last rate hike, but if inflation picks back up, that there could be more rate hikes, right? So he's gonna play both sides of that, I'm sure. So, in the market itself, it's going to be interesting to see what the reaction is. Well, I had I was looking at the S&P this morning, a bunch of different views of it, and I happened to like zoom way out on the chart, and kind of interesting. So I was gonna start the show zoomed in, but as long as I'm zoomed out here, um, you know, recall the big cup pattern here that we've talked about for a while. You know what this cup needs is this big cup needs a handle, I should say. Um, I would be I'd be surprised and shocked if, let me switch this to a weekly chart. I'd be surprised and shocked if this thing just shot right back, all the way back to the high. But pretty incredible. The run that started basically, and I'm not even talking about the October low, but the run that started at the beginning of this year was pretty amazing. And then, of course, things picked up here sort of in the spring. Now, there was a couple of months of just dull sideways action, but just recently, here's the thing. At this point here, can't really see it, but at this point here, the weekly RSI is looks like it's right about 70. The daily RSI, I pointed this out. I guess it was last week, the week before. Let's get the chart up here. Yeah, I mean, basic, simple, rudimentary technical analysis. When the RSI gets, significantly over 70, that typically coincides with a little pullback. And so just last week here, we were doing the show and we had I guess, let's see, 719 was that? Yeah, that was exactly 1 week ago today. I talked about that RSI being kind of stretched again, it was like what, like 72, something like that. It's hard to tell, and for whatever reason, I have the legend turned off on the RSI here, so I can't tell you the exact number, but you kind of get the point down here, right? That RSI gets up there to 75 or greater, and so there was a little dip, not much of one, but and so the RSI is kind of, it's trying to work off being overbought. So, um, in past years, not always, but in certain periods of time that I can recall, the Fed day, like when the Fed interest rate announcement day, marked sort of an inflection point in the direction of the market, right? So it's always possible that Powell tries to talk down the market a little bit. So I don't know. I mean, it's kind of odd because those of you that have been around for all these years, and geez, I mean, I remember, we going back to when, Janet Yellen was the Fed chair. Um, every time the Fed hinted at a rate hike, the market got spooked, right? And so they would, the market always worried about, when the Fed was going to raise rates and when the Fed's going to raise rates. And I mean, for years, the conventional wisdom was when the Fed embarks on a rate hike cycle, that was going to be the end of the bull market, right? Now, of course, that was all pre-pandemic. And so, a lot of things have changed since the pandemic, but back in the old days, I'm sure you guys remember that, I mean, if the Fed even hinted that they were going to raise rates, the market tanked. And so I quite honestly, throw away all your old economics textbooks because, and then of course I've seen plenty of charts, and this is kind of, this is an interesting tidbit, is that typically when the Fed starts lowering rates, that's when the market rolls over, and which makes perfect sense because that means that the Fed's not going to lower rates until there's either an economic shock or the economy is extremely weak. So the thing that I keep thinking about here, well, there's lots of pieces to this puzzle, but the idea is that for one thing, the S&P 500, let me pull this back down so we can see a little bit better. The S&P 500, tends to, well, I should say the market, but the S&P 500, I guess, what I typically call the market, it tends to be like the one thing that investors use to beat inflation over long periods of time, right? Nothing else is going to keep up with inflation. So, interestingly enough, if you take the January 22 high and you adjust for inflation, so when the market gets, when and if the market gets back up here to 4,800, inflation adjusted, it needs to go to like 5,200 in order to basically be at the same level of, I guess, what you would call purchasing power, right? So that's kind of interesting. So, it can make a nominal new high, but in inflation adjusted dollars, the S&P needs to be, 5,200, actually over 5,200 in order to make an inflation adjusted high. Nobody ever adjusts the S&P for inflation, but it's just kind of an interesting point. So, it's been a wild ride. Got a big cupping pattern here. Um, So, will today be an inflection point? Who knows? In the past, sometimes there's been a little bit of a delay, like there's the Fed announcement, and then a couple days goes by, and then you get a pullback or a dip. So when we get into like these really strong markets with strong sentiment like this, like I've seen over the years, then every dip tends to get bought, or at least the initial dips, I should say. So like these last couple of dips here, right? People are just kind of sitting around waiting for an opportunity, a couple of percent, a few percent down, you know, a few percent down, which would be 0 to 5%, 1, 2, 3, 4% would be qualified as a dip, and it'll be interesting to see if that one just gets snatched right up. So, and of course, the other big thing right now is that we're right in the thick of earnings season. And so everything, individual stocks are moving based on their earnings. And that adds a whole different sort of dynamic to the market. So I got a year-to-date chart up here. One of the things that surprises me a little bit is how strong the Russell 2000 has been since the beginning of June, right? And of course, we've looked at this a lot recently. prior to June, you know what I mean? Here we are towards the end of July. So June and July have been outstanding for the Russell 2000, but prior to that, you know, it was kind of hanging around way back by the October lows. So it's got a whole different sort of chart. But we looked at this last week too. The Russell's like got a real pretty solid overhead resistance point, like right around where we are now. So whenever we get to, you know, these sort of levels here, there's always the question of whether it breaks through that resistance and continues higher, or whether it stalls out and reverses. And so we don't know yet, right? Obviously, it's kind of, it looks to me, well, it's obvious that it's sort of stalled out just below this major resistance level. So it's kind of an interesting, kind of an interesting looking chart. Whoop, I didn't mean to do that. It's got kind of a little pattern going here. You know, there's the lower trend line, the resistance level. So, you know, in conclusion, this talking point that I was talking about, and I'm not saying this is going to happen, but the potential exists that today is going to mark an inflection point where maybe we get a reversal in the indexes. And that, you know, and after the Fed announcement. And that doesn't necessarily mean that it's going to be like, you know, today, immediately after the Fed announcement, but, you know, we'll see where the week closes and what happens next week. But in the next couple of weeks, it wouldn't necessarily be surprising to see a dip. However, a lot's going to depend on what happens with the mega cap earnings. Speaking of which, Microsoft had a wild day yesterday. When the earnings came out, by the way, this is the 50-day moving average. Kind of interesting. So, yeah, every time since around the beginning of the year, or at least excluding January, every time Microsoft gets down around this 50-day, they buy it up. But Microsoft like spiked up real big when they announced earnings, and then during the conference call, it sold off, which was kind of interesting. So, I forget what this news was about a week ago, a little over a week ago. Something, you know, it was something about AI, right? See, that's the new thing. I saw some people commenting that about how many times Microsoft and all these companies Google mention AI on their conference calls when they release earnings. But that's a pretty nice uptrend there since the beginning of the year. And Microsoft finally getting a little bit of a pullback and dip. Quite frankly, you know, this is potentially setting up for a buy. There's a couple of places. That low right there looks like a pretty good place to. I'd probably wait and see. Let a little bit more time go by, but let a little bit more time go by. Maybe it comes down a little bit. Maybe it bounces around, but at a certain point, if Microsoft, like, you know, comes back into this area, maybe kind of like this, where it pokes below the 50 for a little bit and then starts to reverse. At some point, you're going to be able to draw a trend line across, you know, these sort of highs or whatever, and then look for it to resume its uptrend. Right, and then of course, you know, if for some reason it's getting ready to have a more significant pullback, then, you know, there's always a good place for a stop. You know, who knows? Maybe that gap gets filled, but it's probably setting up for a buy. Let's look at I'm pretty sure Google came out with earnings yesterday too. Yeah, look at that pop on Google. Let's zoom back out and see. Based on the strength in the Nasdaq and Google being, one of the FANG stocks, it's honestly surprising to see, it's honestly surprising to see that it's still considerably below its all-time high back here, right? Although, quite frankly, this is a pretty darn bullish looking pattern right here. So it seems to move kind of slow. I mean, there's all these like congestion areas, but look at this. Like back in the spring here, Google like traded in, for a long time, most of April in like sort of this congestion zone, and then when it broke out of it, it reached the next sort of level, and it's been kind of doing the same thing, and now it's trying to break out of it. So wouldn't surprise me to see Google, run back up towards the highs. Quite honestly, somewhere one of these charts, and let me see if I got this. It's probably this one. Yeah, that's a weekly chart. Let me look at the daily chart here. Yeah, this Apple chart I have set up so that it shows when the earnings dates are, which is actually it's actually kind of a there we go. You see that this guy right here, 8-3. What's amazing about let me get rid of this. Well, actually, I probably shouldn't have got rid of that, but I might as well for now, because I wanted to draw another line here. This this trend line on Apple, and I think we looked at this last week. I don't know. Every time I look at this chart, being a chart guy, a technician for so many years, every time I look at this chart, it just I can't not draw this trend line because it fits so well, right? I mean, it's just the ideal trend line. And so, yeah, boy, as long as I can remember, I do remember years and years and years back when Apple's earnings didn't cut the mustard, and geez, Apple's had lots of significant drawdowns, but it's going to be really interesting to see what happens. So let's see, 8-3. That's not that far off. It's about a week and a half from now. That's going to be the most important earnings release to the entire market, if you ask me. And so it only makes sense. So anyway, it's really super important to keep an eye on when these companies are releasing earnings, at least the ones that matter. So let's look. Whoop, typo. Hadn't looked at. So I guess earnings are coming out for Facebook today. Interesting. Look at these last two earnings releases, right? And Meta struggled for. This is also an incredible chart, by the way, but you can see back here the prior high in around this time last year is when when they peaked. And of course, a lot of it had to do, they changed their name from Facebook to Meta and the whole silly metaverse thing and all that. So now I believe they're pivoting to AI. They introduced a similar service as Twitter. So it's going to be interesting to see how they do after earnings. But this is another sort of crazy one here. I mean, it got washed out last year in the earnings in October, gap down and sort of wash out, and then basically it's got the same sort of thing that Microsoft has going on here. Just almost a 45 degree sort of rally, since the beginning of the year, which is incredible. So let me put that down there. Look at that 50-day moving average. There's only one little sort of bend in it, right? Um, so yeah, it's going to be interesting to see how this reacts to earnings. It'll be interesting to see how many times they mention AI on the conference call too. um, anyway, so these mega caps, Microsoft, Apple. Well, let's take another look at Microsoft because I don't think I remembered to actually draw the trend line on Microsoft. So let's just see what that looks like. So it's one's a little bit different. I suppose sometimes trend lines don't always fit perfectly, but sometimes they do. But originally, I wanted to sort of draw one back to, these. There we go. Audio's back. Well, that was really, really unusual. For whatever reason, my computer, in the middle of whatever it was I was saying, my computer decided to reject the the audio from my headphones. So I had to do a little finagling there. But anyway, so there's a lot of important stuff going on, but of course today is Fed Day, and so we're going to see what Jerome Powell says and how that affects the market, and then of course we're going to keep an eye on Microsoft, Google, Apple, Facebook. Let's look at Tesla real quick. I believe Tesla came out with earnings last week, took a little dip. One thing that's bugging me here is the idea that the sentiment. I mean, this market's been rallying, for a couple of months, and time is a big factor when it comes to sentiment, right? So you get into these periods of time where the market just keeps going up, even though you'd think that with all the macro stuff out there and all the problems and all the craziness in the world today, and I mean, and all the potential economic black swans out there, and all that, the market just rallying in, climbing the proverbial wall of worry, rallying in the face of what would seem like, not that great of an economic climate. And so that sort of eventually, when the market just keeps going up, despite the fact common sense would say that it probably shouldn't be, then everybody tends to get worn down. The bears capitulate. Everyone gets bullish, and then you start to think, well, geez, the market refuses to go down, so and then the longer that it goes on, like I said, it kind of wears you down, and you let your guard down, and you think, finally, everybody thinks, well, it's manipulated, or there's just no way it's going down, and you can rationalize a whole bunch of reasons for why it just continues to go up in the face of adversity. And you hear things like, well, Europeans and people all over the world are just buying U.S. mega caps and they're not going to sell them and this and that. And so you throw in the towel and you're like, well, yeah, the market's just going to keep going up. It's going to go back to the highs and then some. And then, eventually comes the rug pull out of nowhere, right? And so in order for this market to have a significant sell-off, and right now we're in the middle of summer. I mean, look at how narrow range a lot of these days are, and so we're right in the thick of the summer doldrums, dog days of summer or whatever, and so you don't really expect, I mean, anything major to happen because it seems like the volume and the participation is way down. So it's going to take some sort of event to move this thing, significantly in one direction or the other. It's going to take some sort of, news out of the blue or whatever. And so everybody, has gotten extremely complacent, and that's when I always get a little bit nervous. I can't tell you how many times in the past, we've had this type of environment, and I've thought to myself, well, geez, it doesn't seem like the market should, be up this much or continue to go up, with all this stuff happening. And then, I can't think of any reason for it to go down. And then, all of a sudden there is a reason, and it just comes out of the blue. And so I just want to mention that, like reiterate what I said earlier in the past, Fed days have been, not always, but they have been inflection points that changes the direction of the market, and, at least you get a near-term dip. So we'll see what happens, and it'll be interesting next week when I come back and do the show to see, what transpired afterward. I think a week's amount of time is about enough time to, to let the dust settle. So we'll see what happens. Anyway, I'll see you back here next week, same time, same